In order to meet the growing demand of employment, the government is focusing a lot on startups. In order to encourage people to put up startups, there are certain tax incentives which have been proposed in the budget 2016. So these startup incentive could be broadly classified into three categories. The first one being 100% of the profits which are derived by a startup will be eligible for deduction for 3 out of first 5 years since the startup is incorporated. The second is that there is a long-term capital gain exemption to assessee investing in fund of funds under Startup India Action Plan. So if suppose you sell a long-term capital asset, you have certain capital gains. If you invest them in this fund of funds under the Startup India Action Plan, then these capital gain will be exempt from tax. The third is that if there are any capital gain on transfer of residential property, right, and you invest these capital gain in an eligible startup, in that case, these capital gain arising from sale of residential property shall also be exempt from tax. Let's look at them one by one. Section 54E, investments into unit of funds under Startup India Action Plan. So if there is a taxpayer who transfers a long-term capital asset and makes the investment of the capital gains into a long-term specified asset, in that case, the investment of the whole or any part of capital gains in long-term specified asset within 6 months from such transfer shall be exempt. Of course, I'm going to come to the quantum of exemption, subject to a maximum of 50 lakh rupees. The quantum of exemption shall be as under: if the cost of asset is greater than the capital gain, the entire gains are exempt. But if the cost of asset is less than the capital gain, then the proportionate amount calculated in the following manner will be exempt from tax. You need to see what is the proportion of the amount invested vis-a-vis the gain, right? And that part of the entire gain will be exempt from tax. But the condition is that if you invest in this long-term specified asset and transfer it before 3 years, right, the capital gains which were exempt earlier will be chargeable to tax in the year of transfer of long-term specified asset. What is a long-term specified asset? It shall be the units of a notified fund which are issued before April 1, 2019. Section 54GB, investment into shares of a qualified company. Here, basically, in case you are an individual or an HUF who transfers a residential property and you have capital gain which you invest in an eligible startup, the capital gain from transfer of residential property shall be exempt provided you are investing the proceeds into subscription of shares of an eligible company until 31/3/2019. What is the meaning of eligible business or an eligible startup? These are defined in section 80IAC, right? Now, when we say what is to be done with the money which you are setting up, you can acquire new assets out of such funds. But the question was whether computers will be eligible for being considered as a new asset. Now, there's an exemption which is available under 80IC, but computer until now were not considered as an eligible investment. However, there's an exception which is carved out which says that in case of a technology-driven startup which is certified by Interministerial Board of Certification, even if you use this money, the investment, to procure computers or computer software, it will be eligible for this deduction. The new asset has to be acquired before the due date of filing of return of the investor, right? And you have to continue, or you have to own 50% of the shares of the company. The last one, there is a startup income exemption under section 80IAC. If there is an eligible startup which is defined under this section and it derives profits and gains from eligible business, it shall be eligible for a deduction of 100% of profits and gains for 3 consecutive assessment years out of first 5 years since incorporation. The condition is it should not be formed by splitting up or reconstruction of a business, right? The companies which are eligible should carry on the eligible business, which means business involving innovation, development, deployment or commercialization of new products, processes or services which are driven by technology or intellectual property. A few other conditions are it should be incorporated between 1/4/2016 to 31/3/2019. The turnover should be less than 25 crores for every individual year between 1/4/2016 to 21, and it has to obtain a certificate of eligible business from the Interministerial Board of Certification.